Having been blessed with possession of almost 1/5 of global oil reserves, with GDP per capita high and still rising, Saudi Arabia still lingers behind the desired productivity growth. Over the last 3 years, productivity measured as value added per employee in Saudi Arabia increased just marginally, and there are reasons to it. For example, unemployment level in Saudi Arabia still stays higher than 10% threshold, and Saudization program, as well as strict labor laws in Saudi Arabia, precludes companies, both international and national, of effective usage of professional and high-skilled labor. However, there are some industries to outpace the overall trend significantly. Among those, I would like to mention the ones related to chemicals, namely basic chemicals, fertilizers, and plastics in primary forms. The reasons for such success are quite simple. Firstly, Saudi Arabia benefits greatly from ready-to-access cheap feedstocks like elemental sulfur, oil, and natural gas. Secondly, proximity to growing Asian markets as well as governmental support also gives Arabian chemicals competitive edge. Thirdly, Saudi Arabia together with Qatar has the strongest production capacity in Persian Gulf region and is home to the majority of 20 ammonia units in the area. And finally, Saudi Arabian chemicals benefit greatly from domestic demand. In 2012, more than 2.5 million tons of polymers were consumed in Saudi Arabia and 40 kilos of plastics per capita. Looking forward, productivity growth for industries related to chemicals is likely to be sustained in the future as well, both from growing international demand as well as growing domestic demand. The major factor in growth of domestic demand shall be the governmental wish to create automotive industry. New projects are already being planned for such automotive plastics like acrylonitrile, styrene, butadiene, nylon, and others.